Morning, good day. Depends on when you're watching this. Hi, my name is James Makuski. I'm with the Bureau of Technical Services in the real estate section at the Wisconsin Department of Transportation. I'm a statewide acquisition and litigation coordinator. I have also included my email in case anybody would have any questions. Today I will be talking about partial releases, and satisfaction of mortgages. What is a partial release of mortgage? Well, it's a document that the lender acknowledges which a portion of the property is being acquired has been fully paid and that the mortgage is no longer a lien on that portion of said property. The reason for a partial release is to obtain clear title, protect the property owner as well as the agency acquiring. If a partial release isn't obtained, it could result in the violation of the mortgage agreement. When the property owner sells without the consent of the lender, in which case the lender could declare immediately due and payable all sums secured by the mortgage upon the sale or transfer without that lender's prior written consent for any or all part of the real property or interest in the real property. That sole exception to this is a requirement to include interest in the proceeds checked as where the agency is notified in writing that the interested party, the lender, expressly elects not to be included in the payment. An example would be where there is a minimal impact to the mortgaged property, such as a small fee acquisition, whereas the amount of the compensation is minimal and the overall impact to that mortgaged property will not be greatly impacted. In all other instances, when securing a partial release of mortgage, the agent should give written notification of the pending acquisition to the lender of record, name the lender of record on the owner's proceeds check unless the lender of record otherwise states so in writing, and record that partial release and must include a copy of the acquired parcel's legal description. If the negotiations with the property owner are successful and the time and expense necessary to secure that partial release is deemed too high, the agency may notify the property owner of the problem with the lender's requirements and then move forward to acquire that parcel through condemnation. Most mortgage companies require payment for processing the partial release. Therefore, in some instances, it may be beneficial to proceed with condemning the property in order to meet the project schedule, as well as save time and cost related to that partial release for processing fees. Where the proceeds for the acquisition are insufficient to pay all the outstanding recorded judgments and liens, the required parcel will need to be acquired by a condemnation with the proceeds deposited with the clerk of courts. And then after that, the judgment and lien holders, along with all other parties of interest of record, can petition the circuit court for a determination of how the acquisition proceeds should be paid out. A few basic best practices include the following: using a preliminary plat to identify the parcels that have fee, PLE, permanent limited easement, or highway easements. You can also review the title work, determine which parcels have a mortgage, and then contacting such mortgage companies to determine their requirements ahead of time in order to meet the project schedule. Some of the lender requirements are typically the following: they'll need an appraisal completed on the property, they'll need a copy of the TPP or plat and legal description of the part being acquired, the lender needs their check processing fees, an authorization form, purchase agreement, closing statement, partial release form or / document. Also, as a side note, not all lenders draft the partial release and they may require the agency to do so. Depending upon the mortgage holder, the time to receive a partial release varies. If it's a local bank or credit union, it could be a week, maybe a month, while the larger national lenders, time to process a partial release could be 2 months or longer. They all vary. So the bottom line, plan ahead when you know there's a partial release to be acquired, as it may affect your schedule. Work with the lender and reach out to your counterparts if you need any assistance. Thank you. Thank you. Should you have any questions, please feel free to contact me. I do want to make a little disclaimer. I would not make a good news anchor and reading off a teleprompter. Sorry about all that. Hi, James Makuski with the Bureau of Technical Services, Wisconsin Department of Transportation. I am the Statewide Acquisition Litigation Coordinator. If you do have any questions after this presentation, you can feel free to email me at the email address noted below. Right now, I'll be talking about W-9s, tax identification numbers, and employee identification numbers per the IRS. As the reporting party, you are required to return information to the IRS and the seller for certain real estate transactions that are over $600. Generally, reportable real estate transactions consist in whole or in part the sale or exchange for money, indebtedness, property, or service of any present or future ownership interest in any of the following: improved or unimproved land, including airspace, permanent structures such as residential, commercial, or industrial buildings, condominium units and apparent fixtures and common elements, including land, and finally, stock in a corporative housing corporation. The following is a brief overview of the three pertinent types of tax identification W-9s. You have your Social Security number, which most people have. There's also an individual tax identification number, or TIN. They're usually used by an individual who is required to furnish a tax identification number, but is not eligible for a Social Security number. And then the third is the employer identification number. They are usually used by a person, whether a U.S. citizen or foreign national, who are employers or who are sole proprietors in a trade or business. Additionally, in transactions involving payments of gross proceeds to attorneys, the agency may be required to file a Form 1099 miscellaneous income. It is the responsibility of the outside agency to ascertain and meet any current requirements on obtaining 1099s. As a reminder, users must look for additional updated and current tax year guidance, which is subject to change. And you can look at that at http://www.irs.gov. Or you could seek the assistance of a CPA financial specialist who can provide you with the most current tax information. The closing statement also includes documentation to satisfy the IRS 1099 requirement for real estate transactions valued at $600 or more. So if the proceed payment is $600 or more, the owner should be asked to complete the W-9, which satisfies the 1099 requirement. Currently, WSDOT has updated our negotiation letters to include a request for completing the 1099s. We have about 3 to 4 of them throughout the whole process of negotiations that if we don't obtain it on the first time, it's a reminder to get that owner to fill out that request. So if you have like a husband and a wife, and how they file their taxes will determine who should provide their Social Security number. Typically, if the husband signs the tax returns first and uses his Social Security number, then that's how it should be listed on the 1099. If the wife signs the tax returns first and the husband secondly, the first Social Security number will probably be the wife's, and again, she should be the one listed first on the 1099. Reason being is that on their taxes, the husband signs first along with the Social Security number being listed, but at the negotiation table, the wife fills out the 1099. More than likely, she'll enter her information first. So then when it's sent to the IRS, they can't match it based up on their information, and they will be contacting you to clarify that. So who's ever listed first on the taxes, their individual federal, state income taxes, that should be the person filling out the 1099 and using their Social Security number, tax identification number, or employee identification number first. As the reporting party, the agency must request the transfer's tax identification number no later than at the time of closing. While the request may be made in person or by mailing, Said request must be in writing and include the certification and identification requirements. The tax identification request may be made by using a W-9, request for taxpayer identification number and certification. If the transferor, the property owner, does not provide the tax identification number, the agency will not be penalized as long as a good faith effort has been made to request their tax identification number. Again, do so in writing and provide the owner with a copy of that letter as well. The agency acquiring will want to retain those letters for at least 4 years based on current IRS tax code. Thank you, and should you have any questions, please feel free to contact me. And again, I apologize because I would not be a good news anchor reading off a teleprompter, but these are the times that we're in. All right, enjoy your day, be safe.